Overnight, global shares advanced for the sixth straight day. This marks the best trading period since September of last year. It's interesting to note that many investors are still diving into gold as a risk-averse play, however, and this seems entirely reasonable to me. Overnight, we saw a downgrade of 30 small Spanish banks and also a downgrade of government debt within Portugal. What this means to me is many investors are simply ignoring the bad news at present and just looking at any good news out there and piling into the stock market. When stock markets go up, it seems that US currency trades down against most trading partners. Overnight, the New Zealand dollar boosted up to around 75 US cents. I can only hope that the short-term dip in our current currency was utilised by our major exporters. The big news from yesterday came with the GDP announcement out of New Zealand. This was for the final quarter of 2010. The consensus forecast for this quarter was for a 0.2% growth in GDP figures, and the announcement came out right in line with expectations. Obviously in work, this announcement was met with little concern at all, and markets did not move from that point on. Looking forward to the GDP from this year, due to the Canterbury earthquake, we are also expecting a negative number for the first quarter of this year, and this is despite a strong start. When we look towards the second half of this year, we do expect GDP will pick up, and this is due to an influx of the visitors due to the Rugby World Cup and hopefully maybe the start of the reconstruction activity out of Canterbury. The top performer from yesterday's GDP announcement was the commodity side. Despite a drop in dairy production over the final quarter of 2010 due to the significant drought experienced within Northland and the Waikato, forestry and fisheries did take up the slack in this part of the index. When looking forward to the performance of forestry over the coming year, we are very optimistic here, and this is due to the fact of the reconstruction activity coming through both Japan and also Canterbury. In our ASB commodity price index, the index did record a small gain over last week. Obviously there was a drop in commodity prices worldwide, however the drop of our currency offset any drop in the commodities prices. We have already put out our forecast for next year's milk payout. We're currently expecting a $7 milk price, and this is likely to be above this if the current milk prices stay as high as they are throughout next season.